We are covering these 6 top stocks with big percentage gains today. While watching bullish price actions, let us inform you. Our review on ALUR. Allurion Technologies Incorporated is quickly becoming a name to watch in the weight loss and health tech space. The company has developed a unique, non-surgical approach to weight loss with its Allurion program, centered around the Allurion gastric balloon. But what sets them apart isn't just the balloon, it's the full ecosystem they've built around it. Their virtual care suite integrates AI-powered tools, a mobile app, and connected health devices to give patients and healthcare providers a smarter, more holistic way to manage weight loss. This approach makes weight management more accessible and sustainable for people who want real results without the risks and downtime of traditional surgery. Now, let's talk about why this stock is getting some serious attention from analysts. Josh Jennings just gave Allurion a buy rating, and the reasoning is pretty compelling. The company recently released new data from a study that tested a combination of its gastric balloon with low-dose GLP-1 therapy. Yes, those same GLP-1 drugs like Ozempic and Wegovy that have been dominating the weight loss conversation. But here's the issue. While GLP-1s are highly effective, they often lead to muscle loss and unpleasant side effects that make long-term adherence a challenge. Allurion's strategy aims to fix that by using a lower dose of GLP-1s alongside the balloon, reducing side effects while still delivering impressive weight loss outcomes. And the results? Pretty eye-opening. In a 52-patient case series led by Dr. Luigi Flagello, participants experienced an average total body weight loss of 20.3% over 8 months. Even more impressive is the fact that their lean body mass actually increased by 15%. That's a big deal, because one of the biggest problems with GLP-1 monotherapy is that people tend to lose muscle along with fat, which isn't ideal for long-term health. By preserving and even increasing lean body mass, Allurion's approach could help patients achieve healthier, more sustainable weight loss, something that could put them ahead in the growing obesity treatment market. It's not just Jennings who sees the potential here. Roth MKM also reiterated a buy rating on Allurion, setting a $16 price target. That's a strong signal that analysts believe in this company's long-term growth. With demand for effective, non-invasive weight loss solutions skyrocketing, Allurion seems to be positioning itself as a major player. If they can continue delivering results like this and expand their market reach, this stock could have serious upside for investors looking to capitalize on the future of weight management. Our review on VVPR. VivoPower International PLC is making some big moves that have investors taking notice. The company, known for its focus on sustainable energy solutions and electric fleet applications, just announced a major shakeup. It's spinning off its subsidiary, Carrot Digital, through a direct NASDAQ listing. And here's where things get interesting. Carrot Digital is diving into the world of Dogecoin mining, with plans to convert mined Doge into Bitcoin to optimize returns. Yeah, you heard that right. A renewable energy company branching into crypto mining might seem like an odd pairing at first, but with an implied market cap of $250 million, subject to market conditions, VivoPower is betting big that this strategy will pay off. For current shareholders, there's another reason to pay attention. VivoPower is handing out dividend shares in Carrot Digital. Investors holding VivoPower stock as of a future record date will receive 5 Carrot Digital shares for every VivoPower share they own. That's a significant bonus, potentially giving shareholders exposure to a new, fast-moving digital asset play while still keeping their stake in VivoPower's core business. But that's not all that's happening at VivoPower. The company's electric vehicle subsidiary, Tembo ELV, is progressing on a business combination deal with CCDS. This deal, originally announced in August 2024, hit a delay due to new SPAC regulations, but now things are back on track. The two sides have reviewed the transaction structure, and a registration statement on Form F-4 is expected to be filed with the SEC soon. If all goes as planned, the business combination should close by the end of Q2 2025, pending regulatory approvals and shareholder votes. This deal is a big one because it could set Tembo up for even greater growth in the electric vehicle sector, especially in off-road and industrial applications. With a NASDAQ listing in the works, VivoPower is positioning itself as a company with multiple high-growth opportunities, whether it's in sustainable energy, electric fleet solutions, or, now, even digital asset mining. For investors, the key takeaway here is that VivoPower is making bold, strategic bets. The Carrot Digital spinoff brings a whole new dimension to the company's portfolio, while the Tembo deal could create additional value in the EV space. If these moves pay off, VivoPower could be looking at a major transformation in the coming months. Our review on GLTO. Galecto Incorporated just dropped its latest quarterly results, and let's just say, it wasn't exactly the news investors were hoping for. The biopharma company, which is deep into clinical stage research for cancer and liver disease treatments, posted a GAAP EPS of -$18.53, missing expectations by $2.62. Yeah, that's a pretty big miss, and it's likely raising some eyebrows among investors who are already cautious about the stock. Now, to be fair, Galecto is still in the clinical stage, meaning it's in that high-risk, high-reward phase where heavy spending on R&D is the name of the game. The company is working on some pretty promising candidates, especially its Galectin-3 inhibitor GB1211, which is being tested for liver cirrhosis and several cancer indications. If any of these treatments show strong results in trials, it could be a game-changer for Galecto. But right now, the numbers just reinforce how tough it is to be a biotech company in this stage, burning through cash with no revenue to offset it. For investors, the big question is whether Galecto can keep the momentum going with its drug pipeline while managing costs. A clinical stage biotech missing earnings expectations isn't unusual, but it does highlight the risks involved. The company will need to show more progress in its trials to keep investor confidence up. Otherwise, with cash burn and no revenue stream in sight, the road ahead could get even tougher. Our review on XHLD. 10 Holdings Incorporated is one of those under-the-radar companies playing a huge role in how modern events are produced, broadcasted, and experienced. Whether it's fully virtual, hybrid, or in-person, 10 has positioned itself as a go-to provider for high-quality, seamless event production. The company's secret weapon? The Zyvid Pro platform, a powerful, scalable event production tool that delivers professional-grade audiovisual capabilities, interactive engagement features, and customizable event designs. From major corporate summits and industry conferences to live training sessions and virtual networking events, 10 is making sure companies can connect with their audiences in the most effective way possible, regardless of location. Now, if you've been following the evolution of the events industry, you know things have changed dramatically over the past few years. The pandemic forced companies to rethink how they hold events, and virtual platforms like Zyvid Pro became essential. But now, with in-person events making a strong comeback, where does that leave a company like 10? Well, here's the reality. Hybrid events aren't just a passing trend. They've become a fundamental part of how organizations engage with their audiences. Many companies have realized that adding a virtual component allows them to extend their reach far beyond the limitations of physical events. Instead of only connecting with the people who can afford the time and money to attend in person, businesses can now engage a much larger, global audience without the logistical nightmares that come with large-scale physical gatherings. This is exactly where 10 is making its mark. The company isn't just about slapping a camera on a speaker and calling it a hybrid event. It's about creating high-quality, interactive, and immersive experiences. We're talking live-stream keynotes that feel as polished as a TV broadcast, interactive Q&A sessions that keep virtual attendees engaged, and even simulated live events, pre-recorded content that plays back as scheduled time to give audiences a real-time feel. 10 is giving organizations the flexibility to customize their events in ways that weren't possible a few years ago, and that's a pretty big deal. So what does all this mean for investors? The big question is whether 10 can maintain its momentum as the industry continues to evolve. The event space is still in a transition phase, with companies trying to balance the return of in-person gatherings with the undeniable benefits of virtual engagement. 10's success will hinge on its ability to keep innovating. If it can continue enhancing the Zyvid Pro platform, perhaps by integrating AI-driven engagement tools, real-time analytics, or even virtual reality elements, it could position itself as an indispensable partner for companies looking to future-proof their event strategies. At the end of the day, 10 Holdings might not be the flashiest name in the market, but it's sitting at the intersection of a rapidly evolving industry. As organizations continue to embrace digital-first event strategies, there's a strong argument that 10's services will remain in high demand. For investors willing to look beyond the usual tech giants and high-growth startups, this could be a company worth keeping on the radar. The way people experience events is changing, and 10 is making sure it stays ahead of the curve. Our review on CLIK Holdings Limited, a company specializing in human resources solutions, offers a range of services, including talent sourcing, professional solutions, and staffing for CPA firms, charitable organizations, and small to medium-sized businesses. The company is making some important moves to restructure its corporate framework, with a general meeting scheduled for April 14, 2025, where shareholders will vote on a set of proposals aimed at strengthening governance and potentially increasing shareholder value. One of the biggest proposals up for discussion is the introduction of a dual-class share structure. This would allow the company's executives and insiders to retain more control over corporate decisions, which could provide some stability and a clearer long-term vision. However, it could also limit the influence of regular shareholders, something to consider for those with a stake in the company. Alongside this, the board of directors is recommending the approval of a new 2025 equity incentive plan. This plan aims to attract top talent and ensure that leadership remains motivated to execute the company's vision, which could pay off in the form of better strategic decisions and growth in the future. Another key proposal involves a potential share consolidation. While this wouldn't affect the company's overall market value, it could make the stock appear more appealing by reducing the number of shares in circulation, possibly boosting the share price and making it more attractive to investors. For shareholders, these changes could mark a shift toward a more streamlined and focused approach. The big question is whether they will result in tangible benefits. If CLIK Holdings can execute these plans effectively, it could improve both governance and performance, leading to long-term growth. As the meeting approaches, investors will be keeping a close eye on how the proposals are received, as they could significantly impact the company's future direction. Our review on HOLO. MicroCloud Hologram Inc, a player in the holographic technology space, has been making some big moves lately, and not without a fair share of drama. The company, which specializes in advanced holographic LiDAR solutions and digital twin technology, has had its fair share of ups and downs, especially in the stock market. After a brief moment of meme stock fame, where shares spiked from 25 cents to a jaw-dropping $129, the bubble burst, and the stock has struggled ever since, dropping below $1, putting it dangerously close to the NASDAQ delisting threshold. But MicroCloud isn't backing down. It's been throwing everything it can at the wall to turn things around. The company recently made some high-stakes investments, sinking $200 million in a Bitcoin and other crypto-related assets. While these moves haven't exactly saved the stock price, it's clear the company's betting big on the volatile world of digital currencies. Additionally, MicroCloud is pushing into blockchain, quantum computing, and AI-powered augmented reality with another $303 million invested into these cutting-edge technologies, hoping that futuristic innovations might be their ticket to a comeback. One of the more classic moves in the company's playbook is the reverse stock split. After a 20-to-1 split last year, MicroCloud is now planning a 40-to-1 reverse split, subject to shareholder approval on March 24th. The goal? to lift the stock price above that all-important $1 mark and avoid delisting. While this might help in the short term, it doesn't fix the core issues, and with the possibility of further stock dilution on the horizon, it's hard to say if it will provide lasting relief. On the positive side, MicroCloud has built an impressive patent portfolio, 183 patents, to be exact, with another 1,695 copyrights related to its holography work. The holographic industry is projected to grow by $13.33 billion by 2028, and MicroCloud's innovations are well-positioned to capitalize on that growth, assuming they can convert these patents into meaningful revenue. But the clock is ticking. With financials showing a cash surge of over 500% and a 42.16% revenue increase in 2024, MicroCloud is far from out of the fight. The company's not only relying on its past performance, but also doubling down on R&D and global expansion to push itself forward. Whether these bold moves can turn the ship around, or if it'll be another tale of a promising tech dream that fizzled out, remains to be seen. Investors will want to keep a close eye on the upcoming shareholder vote in the next few months, because MicroCloud's future could go in one of two directions: a comeback story or a cautionary tale. Please subscribe, give the video a like, and watch more from our playlist. Thanks.